Hello, my name is Steve Bigelow with the Candlestick Forum. Market direction is still very tentative, very iffy. Today, we saw the Dow close back below the T line. That was after hitting this upper resistance level area. Once again, this is indicating that this market is moving sideways without any more bearish strength to it. Now to the prospect of having it pull back some, maybe to just even the bottom of this channel, but it tells you there you still have to have long and short positions in the portfolio. The NASDAQ opened up and traded higher today, exactly what you wanted to see it do here at the T line, but notice where it closed. Even though a lot of people were going to take a look and say, oh, the NASDAQ was up today, it's a very weak signal. It closed back at the low end of the trading range. This is the advantage we have of candlestick signals and patterns telling us what is actually happening versus just what the numeric numbers of a market is doing. Now, last week, we saw a lot of J-hook patterns, especially over in the oil area. Crude oil is still trading up strong, but a lot of those stocks are taking some profits. They're still above the T line, but there's some profit taking. This week, it appears to be, oops, that was the J-hook setting up in the oil stocks last week. This week, it's the biotechs. PGen, for example, is one. You can see how the indecisive pullback, which is much more informational for the candlestick investor, to see that when they were selling it off, they weren't selling it off with any great urgency. Right back to the T line. Now a gap up best friend breakout, putting you into wave 3. You can see that in quite a few stocks. Biotech, Mara, kind of a gap up kicker signal breaking through this level. Another J-hook pattern. So this makes it very logical that if you can apply 2+2 analysis, that there's a lot of buying, strong charts in the biotechs, that means they're probably being bought across the board this week. Those are good trades for the week. Other patterns like DOMO, you can see the fry pan bottom. This is what we call the classic pattern. What do we expect coming out of a fry pan bottom? A very strong price move. What do we expect coming out of a J-hook pattern? Next wave. This all combines, telling us we're definitely in the right direction at the right time. So you can apply that to whatever you're trading. Tesla, for example, trading back up above the T line, you can see the J-hook pattern. Now, the advantage of going after the patterns is twofold. One, it tells you with a high degree of probability which direction prices are moving. And two, the magnitude of the move coming out of a pattern is going to be much more enhanced than merely an uptrending stock in an uptrending market, or in this case, uptrending stock in a very flat trading market. So this allows you to identify which of the traders are acting the best. For example, Netflix. You can see the fry pan bottom, J-hook pattern that kind of supported right here at the 50. This tells you there's a probability that more upside is about to come. And again, the magnitude of that move could be extremely strong. Same scenario on the downside. Overstock last week did bearish left-right combo. Traded back down through the T line in a downtrend, which pretty much told you that every time the buyers got up to a resistance level, the sellers are stepping in. That's continued Overstock's downtrend as long as it stays below the T line. So the reason we've got both long and short positions in the portfolio is if the market is not showing any decisive direction, we can take advantage of the strong sell signals. Our recommendation to go short in Goose was based upon a bearish flutter kicker signal. And then look at the failure at the 50 doing what we call a blue ice failure. That if as long as it stays below the T line, the failure here at the 50 tells us now our next target is likely the 200-day moving average. So right now the markets, the Dow on Friday closed Thursday and Friday just closed above the T line, but the fact that they turned it around on Monday tells us with stochastics rolling over, there's a much better prospect that there's going to be some selling. This is why you want to have short positions in the portfolio right now. That'll be it. We'll see you in the chat rooms.